Hey everyone, welcome to this edition of our Redwood Financial Strategies Education Time. For this time, we're going to go through the ever so fun topic of life insurances. What are the differences between term life insurance and whole life insurance? Those are the two most common ones. There's a lot of other ones that you can get into. We're just going to focus on these main two. It'll most likely take care of 90% of the policies that we talk about. So let me share my screen here. I'm going to pull up this term versus whole life screenshot here from Investopedia. They just do a really good job of sharing this stuff. So in our conversations before, we've always talked about term life insurance. Think of it like renting an apartment. Okay, you pay money each month. You're not going to see any return. You don't get to sell anything. There's no equity built in there. Prices are generally cheaper. You don't have upkeep. You don't have maintenance. So your costs are less. So you're renting something for a certain amount of time. And when your time is up, you say, peace out, walk away. You don't have to do anything else. So that is what a term life insurance policy is. So as this states, typically it's the cheapest form of coverage. So you can get the most death benefit to help cover something for the family should something happen to you, God forbid. There's no wealth building portion of it, so there's no equity that builds up inside of it, and not a whole lot of tax planning strategy, simply because term life insurance expires after a certain term. So generally it can be a 20-year term, a 30-year term, something until age 80 with an increasing premium. So premiums on those, as you get older, if you're on an increasing one and not a level, prices will go up as you get older. So let's compare that now to a whole life policy. So there's always pros and cons to a whole life policy on if you're looking to build up cash value and accumulated equity. So think of this like buying your house. You want to buy a house so it's yours. You can do whatever you want with it. There builds equity within it. So basically the price of the house and the cost of your mortgage, the difference between those is your equity. So same with the whole life policy. They start to build up equity in the policy that you can either A, borrow against, 2, cash out, cancel the policy, or take a loan out. The nice thing with the whole life policies is the premiums are locked. So 99% of the policies are going to be a locked premium. And so if you lock in a premium at age 35 and you're still paying for it at age 65, it's going to cost the same. If it's $300 a month at 35, you're going to be paying $300 a month at 65. So it does not go up with inflation. So you can actually kind of look at that as your premium amount is going down because inflation continues to go up. These policies never expire as long as you keep making payments or the policy is set up to stop paying for it at a certain age. And then these are more expensive. So just like a home, there's extra maintenance, there's higher costs, there's interest, all that stuff. So a whole life policy is more expensive if you're looking at it from a pure death benefit need. So if someone comes to us and they say, hey, I need life insurance for 20 years, most likely a whole life policy wouldn't be on the radar. But it could be if they said, well, I'm willing to pay more so that I can get my cash back after 20 years. If I cancel it, the cash value should be higher than what you paid. So you should be able to pull and recoup that cash back. Or a term life insurance policy for a 20 or 30-year stint where you're paying a much lower amount each year for it. After the 20 or 30 years, it's gone and you don't have to worry about it. So two different types of life insurances. Most of the time, these get blended together. So we have some term life insurance for a large portion of death benefit. Say we need $1 million of life insurance to cover our families if something were to happen. Get our wives or our spouses or our husbands through, the years of having kids, paying off mortgage, etc. Once we do that, we want to get the big one, and then we'll tack on some whole life insurance then as well if we want some of that cash building accumulation, and we want life insurance to last all the way through our retirement until the day we actually pass away, which hopefully is long past our retirement date. So those are the two main coverages here. Reach out with any other questions. Maybe we'll dive into a couple of different types of whole life policies down the road, but hopefully this was a good general topic for you. Enjoy the rest of the week. Talk to you guys soon.